This is a demonstration of exercise M823, preparing journal entries. Marsh Company uses a standard cost system and reports the following information for 2024, and we are given the standard costing information and then the actual information for Marsh. And they also give us the direct materials, direct labor, variable and fixed overhead cost, and efficiency variances. In the requirements, it states that Marsh produced 1,000 units of finished products in 2024, and it asks us to record the journal entries for direct materials, direct labor, variable overhead, and fixed overhead, assuming that all expenditures were on account and there were no beginning or ending balances in the inventory accounts. All materials were used in production and all goods produced were sold, and to record the journal entries for the transfer to finished goods inventory and cost of goods sold, omitting the journal entry for sales revenue, and to record the journal entry to adjust the manufacturing overhead account. So first we're going to record the purchase of the raw materials. So the standard cost for raw materials was $1.05 per yard as given in the problem, and we actually produced purchased 2,600 yards of material. So we would debit raw materials inventory for $2,730. We actually paid $1.10 per yard for the 2,600 yards of material, so we would credit accounts payable for $2,860. So we had a direct materials cost variance that was unfavorable of $130, which was equal to 5 cents per yard times the 2,600 yards of material that we bought. Next, we're going to debit work in process inventory for the standard cost and the standard units. So the problem stated that we used 3 yards of cloth per unit at $1.05 per yard, and since we produced 1,000 units, we should have used 3,000 yards. So we would debit work in process for $3,150, and we would credit raw materials inventory for the standard cost times the actual yards that we used, which was $2,730. So that means that we had a direct materials efficiency variance that was favorable of $420 since we used 400 less yards of material. Next, we would debit work in process inventory for the standard direct labor hours, which the problem stated was 2 direct labor hours per unit at $10.50 per hour. Since we produced 1,000 units, then we should have used 2,000 direct labor hours. So 2,000 times 10.50 would be $21,000 to work in process. We actually paid $10 per hour for 1,800 direct labor hours, or $18,000. So we had a favorable direct labor cost variance for the 50 cents per hour, and that would be $900. 50 cents times 1,800 hours, and we had a direct labor efficiency variance of $2,100 for the difference in the 200 direct labor hours times the standard cost of $10.50. Next, we're going to debit our manufacturing overhead for the actual variable overhead and fixed overhead that was actually incurred, which was $9,000, and we would have credited various accounts for that. Next, we're going to debit work in process for the standard overhead, which we were told in the problem that we allocated overhead at $5 per direct labor hour, and we were to use 2 direct labor hours per unit, and we produced 1,000 units. So there should have been 2,000 direct labor hours at $5 per hour, and that would mean work in process should be debited for $10,000, and manufacturing overhead would be credited for that amount. It stated in the problem that all of the goods were transferred out, so we would debit finished goods inventory for the standard cost for the materials, direct labor, and and overhead. So the total of those three was $34,150, and we would credit work in process for the same amount. It also stated that all of the goods that we produced, we sold. So we would debit cost of goods sold, again for that same amount, $34,150, and credit finished goods inventory for the same amount. Next, we're going to close out the manufacturing overhead account. So manufacturing overhead was actually over allocated by $1,000. We only incurred $9,000 and we allocated $10,000 using the standard costing. So we would need to debit manufacturing overhead for $1,000 for the over allocated amount. Next, we would debit variable overhead cost variance and fixed overhead cost variance based on the information that we were given in the problem. Both of those were unfavorable, $1,500 for variable and $600 for the fixed cost. So debit both of those. And then we had two favorable efficiency variances. So we had a $1,500 favorable variable overhead efficiency variance and a $1,600 fixed overhead volume variance. So we would credit both of those. $1,500 for the variable efficiency variance and $1,600 for the fixed overhead volume variance. And that is the conclusion of the demonstration for exercise M823.